Good evening, everyone. Welcome to Indian Chamber of Commerce 21st show of ICC Biz Live, our knowledge show. So we have with us a very eminent person today, Zakhil Suresh, founder and CEO at BitSave. He's a crypto asset solutions provider. If, uh, you may be tracking the cryptocurrency in papers today. The one value of one cryptocurrency is around $120,000, and President Trump is accommodating through various legislations. Anyhow, we will hear about it in details. First, I will request Mr. Suresh, please introduce yourself and your organization and what you offered to us.
Hi, good evening. Good evening to everyone listening as well. First of all, it's an honor to be here addressing the members of Indian Chamber of Commerce. Myself, Zakhil Suresh. I am a qualified trader. So the CMT that you see along with my name, it's basically Chartered Market Technician. It's a designation that's for professional traders. So for the last 7-8 years, I've been trading the markets, mostly crypto markets. I started as a CA student. So that's my background. It was basically in 2017 that I discovered that maybe crypto is where I can contribute a lot more. So 6 months before giving my CA finals, I decided to do crypto full time. I started as a broker, as a liquidity provider, help set up Coinex, which was back then India's largest crypto exchange. It went on to do tremendous volumes in a matter of few months since launch. Was involved in the whole Coinex journey in different capacities. Unfortunately, in 2019, because of the RBI banking restrictions, we had to shut down Coinex. But me and my team, we continued trading, doing a bit of brokerage. It was basically post-COVID that we found there's a huge problem within the crypto investment ecosystem. That is, every platform was becoming very complicated for a normal investor. The number of assets that are available, it just increased a lot after COVID. So an average investor that we get to speak with on a daily basis, they were finding it very difficult to enter the space, making the right decision. So that's one problem statement that we wanted to solve. So that's how in 2022 we set up BitSave as India's first investor-focused crypto investment platform. So while everyone else is maybe providing a trading solution focused or optimized for traders, we are basically providing a platform that is specifically for long-term investors only, and only large cap assets, to be specific. So we don't offer anything apart from, maybe the top 20 or 25 crypto assets by market cap. So yeah, that's been the journey so far.
Thank you. That is very very simple to understand. Now, coming to the topic, why Bitcoin matters. I request you to explain what is a Bitcoin. According to literature, Bitcoin is the first practical solution in computer science known as the Byzantine general solution. And could you please explain this about these Byzantine generals and how it helps in knowledge transmission?
Sure. So I think when you take a step back and basically look at what's happening around us, everything is basically a technology, right? Like, let's say if you take the last 50 years, there are different technologies helping us do different things. For example, aeroplanes help us get from point A to point B, or let's say you have emails that helps us send messages from point A to, let's say, person A to person B. So money is also a technology from that point of view. Money basically allows us to move value from, let's say, person A to person B. Right. So that's one way to look at it. And if you see the technology of money that we are using right now, or let's say what is widely being used worldwide, it's a technology that existed. I mean, that's been existing for almost 55 years, because the last time we dropped that gold standard, that was way back in 1971, right? So since then, the fiat currency system came into picture. So if you think about it, there's a natural evolution of of money from that point of view. Like it always evolves into a better form, right? If the current form of a technology has its flaws, we always figure out a way to make it better with a new form of money or a new technology for money. So for me, it's a very natural evolution of how money has, the function of money has been over so many centuries or decades, for that matter. So if you think about it, at the end of the day, money is something that helps us to move value or store value over time and space. So today I have certain value with me. I want to store it and exchange it for something else tomorrow. So Bitcoin is a digital version of money from that point of view, which is not really controlled by a central bank like we are used to in the fiat ecosystem. So it's basically it's like a form of money that people have invented for us to use without having to kind of rely on a third party. Because when you rely on a third party, maybe it may not be a big problem in India, but there are so many countries where you're not allowed to move money. It's being confiscated. It's that you require a lot of permission to move it if you put it in a bank. And there are so many countries where these things are not really available for people, right? So it genuinely solves a problem in terms of giving that power back to people. So that is essentially what Bitcoin does. So if you think about how things were maybe 100 years back, 200 years back, we were using gold and stones and seashells, all those things as money, right? And all those things were decentralized. If you think about it, it was not really controlled by one entity. It was because of gold's limited properties as money. It had some limitations in terms of a globalized world. We were not able to use gold to let's say move it across different countries or let's say divide it for small transactions. So finally we had to rely on or let's say trust third parties to store that gold, and then that's how paper money came into picture. But the trust was misused by people who were holding gold for us, and finally we were off the gold standard. So yeah, I mean, it's basically going back and creating a digital version of gold with the same properties of, let's say, scarcity and divisibility and portability, and the fact that it's fungible and all that. So yeah, that's one way I look at it. And if you think about it, Bitcoin is the best technology that we've ever had for money. If you think from those perspectives, there are certain properties that money requires, and Bitcoin is the only form of money that we have which sort of ticks all the boxes for us. So I say this, that in the current AI powered digital abundance, Bitcoin is the only true digital scarcity that we have. I think you're on mute.
Sorry. So it's basically a form of currency. That is what you are saying, and that can be transmitted safely from one point to another because of the blockchain technology. So
Yes.
now, is it why is it so safe that cyber criminals cannot hack this system of money transfer?
See, again,
Can
if
you?
I have to go back to the example of gold, right? Like if I have one bar of gold and I give that one bar to you, uh, now I can't give that gold bar to someone else, right? Because I've given it to you, right? Now when we try to replicate that physical aspect of gold into the digital world, the one major challenge that we had was double spending. Because in a digital world, let's say if I have a picture and I send that picture to you, I can send that picture to anybody else also, right? Because I have a copy, you have a copy. So basically, just like how we transacted gold, we can't do that in the digital ecosystem. Because just because I send it to somebody else, it doesn't mean it has gone from me. So that's how we introduce something called triple entry accounting. Yeah, I think most of us are used to double entry accounting, where one account is debited and the other account is credited. But with Bitcoin, we introduce something called triple entry accounting, which is basically one account is debited, the other account is credited. At the same time, everyone that is part of the network also updates it in their ledger. For example, when I send you one Bitcoin, everyone knows that I don't have that Bitcoin anymore. Now you have that Bitcoin, and the fact that now I can't spend that Bitcoin anywhere else. So that's one problem that we solved with blockchain as a technology. So you can think of this as something as an open Excel sheet or open spreadsheet that everyone can see, but basically nobody can manipulate. Now, coming to the manipulation part, it's designed in a way that if for every transaction to be updated, these people who are participants in the network have to update or have to confirm that I have the Bitcoin to send, or if I don't have the Bitcoin to, if I don't have that balance with me, the network participants would essentially say, this person don't have the balance, he can't spend it, right? So there are so many checks and balances in place as part of the network itself. And because of that, for 16 years, Bitcoin has been doing its job without fail. There's never been a fraudulent transaction recorded on Bitcoin's blockchain. That is because it's that secure. If you think about it, like I keep saying this, that regardless of what happens with price and regardless of what people say about it, the good, the bad, and everything, the fact that ultimately we created Bitcoin for that one purpose of making sure that we have a database that nobody can manipulate. And that's exactly it's been doing for 16 years, every 10 minutes without any fail, right? So it's been doing its job, and that's exactly why it has so much of value today.
Who is the inventor of Bitcoin? I think we are not sure that there is a Japanese or a Chinese person. Can you throw some light on it?
Yeah, so see, the point is it doesn't matter. I mean, it's just like ask. I don't know. I was in fact looking today who invented internet. Nobody knows, right? Because it's an evolution. I mean, the point is it doesn't matter because internet is a decentralized network where we all are participants of, and nobody can really change the rules of that network. Of course, it was invented, or the idea was proposed by someone or a group of people we don't know yet, named Satoshi Nakamoto. We have no idea whether it was a group of people, a single person, what was the nationality or origin or anything of that sort. But again, my point is it doesn't matter, right? Because just because one person proposed the idea, that person have no control over Bitcoin as a network. He can't change anything today. Even if he comes back, there's nothing he can do because it's a network that is, or it's a system that is owned by people supporting it. So for any change to happen, a majority of people who are part of that network have to approve it. Right. So just because Satoshi comes back tomorrow, he can't make any change because it's an idea that he's proposed and the world has adopted that idea. So I think it's better that it's a little mystery that way, and I think I love that part of Bitcoin, the fact that we don't have a face attached to it, and that makes it fully decentralized. Like it's people's money made by people and run by people for us. Yeah.
Yeah, the analogy with gold is very, very loose, is simplifying. Now, next question is, why is Bitcoin so limited in supply? Is there no way we can enhance the supply? And because of the limited supply and the huge demand, the value has kept on escalating. Somebody who has bought Bitcoin at few dollars and now able to, if they sell, they can sell at more than $1 lakh. I mean, why? What is the mystery around it? Throw light on us, sir.
See, there's one important thing. I think if you take a step back and actually think about what do we truly have, as humans, right? What we actually have is our time and energy. If you think about it, right, like that's what we truly own. That's the real currency of our life is our time, right? Because I am exchanging my time and energy for value. So when someone is working for a job and let's say you're getting paid 1 lakh a month, you're not really working for that 1 lakh. You're basically exchanging your time and energy for maybe 1 month of food, 1 month of rent, 1 month of fuel, 1 month of your child's education. And whatever is left with you, the 10%, 20% of that value, you want to store it over time. You want to store it for your future generation and all that. So if you think about it, time and energy are two finite resources, right? There's a reason why I value my time, because I know that I'm not going to live forever. One day I'm going to die. I can't spend, I don't have unlimited time to spend with my friends and family. I don't have unlimited time to contribute to the society. So I value my time because of its finality. The same for my energy also. It's a finite resource that I have. So it's a very basic demand from me that I want to store that part of my value that is created with my finite resources also in an asset with the same finite property. I hope you're getting what I'm saying, right? Like,
Hmm.
if I'm storing it, I don't want to store it in an asset which someone else can print, out of maybe thin air, right? I want to store it in a form of money that has the same finite properties of my time and energy. So that's why the finality, or the fact that Bitcoin supply is finite, is so powerful. It's something, it's actually for the first time in the history of mankind we've been able to create a form of money with that kind of a property. Yes, the internet and the code and the computers and the machines made it possible. And now when you think about it, before that we were relying on natural scarcity. It was not a finite, it was still scarce. I mean, gold is scarce, and now we are hearing, there's a new gold mine in Uganda, there's a new gold mine in some asteroid for that matter. So these
Right.
can, inflate the supply of gold from that point of view.
Hmm.
We've had stones and, like seashells used again. We relied on those supply, but then eventually all those were, prone to oversupply, right? So that's why it's so powerful. That 21 million number is so powerful. But if you ask me, you ask me why can't it be increased, right? The fact that it can actually be increased, like if all of us, or let's say if the community vote that, okay, I want to make it 25 million, I want to make it 50 million, we can. But the point is, why would anyone agree to it, right? Like, for example, today, if I'm holding 10 Bitcoin, I have a
Yeah.
guaranteed, proportion of that network, 10 divided by
Hmm.
21. That is my share of that network. Tomorrow,
Right.
if I agree to vote and make it 25 million, I am devaluing my time and energy, right? So I won't do that. So that's the beauty of the network. I mean, that's the beauty of the
Hmm.
whole system. It has put those checks and balances in place to protect itself from these things. And when once adoption is there, nobody will agree, right? But why do I want to, uh,
Hmm.
like, let's say, devalue myself or my future, right? So I'm
I
not
get.
going to. Yeah.
So finiteness is a beauty, be a beauty of the Bitcoin network. I get it. Hmm. There is a huge logic behind this. Now, let's move on to something which is more in supply. Nowadays, we keep hearing of stable coins. What is a stable coin? As far as I know, it's linked to a stable dollar value. Is the hegemony of the dollar coming back via stable coin? Who are the issuers of stable coins? And is there a big competition between Bitcoin and stable coin? What is the mystery of stable coin?
Yeah, so stable coins are basically, like we spoke about triple entry, accounting, right? So there's an advantage because of that. So if you think about it, today, if I'm trying to move money through banking, there are too many databases that have to be updated. And maybe not really UPI and all that, but let's say if you're moving money globally, there are way too many databases that are required to be updated. So it takes a lot of time to settle these transactions, right? So since blockchain solve for the need to rely on third parties and the fact that you can update databases instantly, uh, we took that good part of, or let's say that part of Bitcoin as a blockchain, or blockchain in general, and then we packaged it, or let's say we packaged these dollars into a digital format with those characteristics. So what basically stablecoin issuers do is they take money, as in they take dollars, because most of the stablecoins are dollar backed. They take the dollar, they put it in the bank, and then they issue equivalent amount of, let's say, whatever token that is, right? So the largest issuer is Tether. Interesting thing about Tether is that they just 100-member team, and they make billions of dollars in profit every year. This second one is Circle, the issuer of USDC. They just recently went for an IPO, and it was, I think, one of the most successful IPOs in the history, or at least in the recent times. So yes, there is competition between a bunch of these players right now, and what essentially it does is it gives you a crypto version or a digital version of dollar that can easily move across different jurisdiction on blockchain without having to depend on a bank. Yeah, so that's why it's basically becoming more popular these days.
Does your service include this stablecoin money transfer via stablecoin?
No, I mean, like I mentioned, we've designed the product exclusively for long-term investors who want to park their wealth, park their value, or let's say their funds for long term. So what we do is only specific to them. We don't have anything that to do with cross-border transactions or even within India, person A to person B. That's not something that we do as a brand.
Okay, okay. Now,
Yeah.
coming back to stablecoin, they process over 27 trillion in volume, more than Visa and Mastercard combined. I mean, this amazing success is a simple, quick and fast transfer without depending on banking channels, and maybe at a lesser cost of money transfer. Is it because of that?
There's a bunch of combination, but before we get into the tech aspect of it, there's one thing to clarify, right? Like maybe it's not really a ideal comparison because Visa and Mastercard, whatever number that you see, it's purely for payments. But whatever volume that you see for stable coins may not really be for payments particularly. For example, it could be one exchange moving 1 billion from its one wallet to the other wallet. Right? So it's not really payments, but it also translates to the value that is being settled via these blockchains. The actual money, I mean, actual amount that might be used for payments, which is kind of ideal comparison with a Visa or a Mastercard, could be different. But at the same time, yes, these are picking up. So again, talking about technology, right? Like global banking still uses, let's say, maybe a 50-year-old technology for that matter, and it's essential that we upgrade. Just to give you an idea, let's say if I send money from Singapore on a Friday evening, I might get it in India on a Tuesday afternoon, right? Because of whatever is
Hmm.
required for the money to move. And global
Right.
banking is available for 40 hours a week. And at the same time, blockchains are open 168 hours a week. So it's basically 4x efficiency if you think about it, right? So, and when countries realize it, they're like, it's a way we can do more business. It's a way to get faster settlements, and as an economy, it gives us an opportunity to advance a lot more. So so that's why you see a lot of countries right now adopting stable coins. I read that even last week Bahrain confirmed a stable coin act to facilitate the local currency backed and both dollar and local currency backed stable coins. So see, if you think about it from that point of view, it's like in a world where everybody is using 5G, you don't want to end up using 2G, right? It's just as simple as that. Just like how we share information, you also want the value to be settled instantly, faster. So it's a very natural way. I mean, once I know that there is a faster way to get from point A to point B, I'm not going to use the other way. I will anyway use the, again, it all boils down to that time and energy part. We all want to save our time and energy, right? So why do I want to wait more to settle a transaction, to do a trade, when I have a easier, cheaper way to do it? Of course, cost is a factor. If I send money from US to here for a transaction, it might take anything between $20 to $50. And if stable coins can do it for less than $1, why not? It's beneficial for all of us.
Wonderful. Now, the one natural curiosity you are arising in my mind is that is it right to draw a conclusion Bitcoin is more of an investment tool and stablecoin is more of a money transfer tool?
Yes, it is. It is. As of now, yes. Bitcoin as a payment tool have not really. I mean, we've not gotten there yet because Bitcoin is still a volatile asset. Again, just to clarify, it's not a feature of Bitcoin. It's basically the feature of people trading it. Right. So Bitcoin is currently, let's say, it has it's more volatile than a dollar for that matter. So for businesses to use it for cross-border transaction, it might not be very practical. Um, my bet is in 10 years we'll get there, and Bitcoin will become unit of account also, which is the only box that have not ticked so far. So we'll get there. And even if you see right now in countries like El Salvador, they use Lightning networks to pay for transactions. But at the same time, globally, since we have not gotten to that point yet where people are transacting in Bitcoin to buy a coffee or whatever, for that, people still prefer using stable coins, because if you see, Bitcoin is used as an investment because it helps you to save your value over time. It protects your value over time, right? But at the same time, stable coins are primarily for payments. You're not using it for savings over time. You're basically using it to spend that money or send it to somebody else or pay for a particular service then and there, or let's say in the very near future that you know. So yeah, that is how it is. But I'm very sure that in the next 10 years, Bitcoin will have a lot more market share for payments as well than it has today. So then we're going to see a competition. As of now, it's mostly Bitcoin for store of value and stable coins for spending.
I'll just share you my personal story. Bank of New York MD, previous MD, Anish Kumar, India MD, had urged his daughter to invest in Bitcoin at the time of inception. And today his daughter is a millionaire, maybe billionaire. I don't know. I wish I had done so.
It's not late. That's what I keep saying. Like the world's wealth, Bitcoin is just what 0.5% of world's wealth. We have a long way to go. I mean, even if it gets to what 2.5, we are talking about 5x of what the value is right now, right? So and the world have just discovered it, right? Like the beauty of how we live. I mean, the current scenario is that everyone have a convenient way to allocate to Bitcoin. I mean, let's say it was not the case 5 years back. If you want to buy it on an exchange, leave it there, you can do that. Buy it on an exchange, take it to your self custody, you can do that. Buy it on an exchange, maybe set up a multi-signature wallet where your family members have separate keys, or let's say pieces of the key, you can do that. You can buy an ETF, you can approach an asset manager to do it. You name it. I mean, regardless of where you are in the world, you have a way to allocate to Bitcoin right now. And the world is figuring out that, okay, this is the best form of money. And again, it's still 0.5% of the wealth. So it's a long way to go from that point of view. And I think so. ETFs were more like an IPO moment for Bitcoin. We just got started. We got listed on a stock exchange type of a moment, and we're going to see that growth over the next, let's say, 5-10 years are going to be very interesting in terms of how much of that global wealth store of value market share that Bitcoin is going after. It's currently going after a 500 trillion, market target market. So that's the estimated amount of wealth that is stored in different assets. And it's very early stage for Bitcoin in terms of how much it has captured. And so there's a lot of upside for Bitcoin as a store of value. So don't
according
feel, I mean to say, don't feel you missed out.
Okay, so according to you, we are nowhere near a asset price bubble. What many investors oftenly says.
Yeah, it's just starting from that point. This is interesting indicator of how much of wealth has been stored in Bitcoin. Like it's people say that it's not really backed by anything. It's actually backed by our time and energy. It's backed by how much of our value we have locked into that network. And typically, market cycles we see the price of Bitcoin going 5x, 6x of what that actual value that is locked into the into the network is. I think currently that number is between 1.5 to 2. So we are nowhere around where historically we have seen typical peaks of Bitcoin. But again, it's all going to be cycles. We might, let's say we go to 500K and then maybe come back to 300K, and then we go to 1 million after that, right? So but because there's no limit in terms of how much value we can produce as humans, and there's no limit to how much value can be stored in Bitcoin blockchain, but there's a limit to how many Bitcoins we produce, right? So that only means one thing: the price will go up.
Okay, sir. Now let's come to the regulation part. Is it true that Bitcoin is outside government control, where stablecoin is in government control?
Yeah, it is. It is because Bitcoin is a bearer asset. What bearer asset means is if I hold a gold bar, I don't have to depend on somebody else to uh, to let's say have value for that. For example, I can transact it without having to depend on somebody else. Bitcoin held in self custody is a bearer asset, which means that nobody can regulate Bitcoin. Even when people say Bitcoin is not regulated or Bitcoin is unregulated, it can never be regulated. You can only regulate the service providers of Bitcoin, just like gold. You can't regulate gold. You can maybe regulate a gold ETF. You can regulate people who are supplying gold. But you can't regulate gold. So it's the same thing for Bitcoin also. You can't regulate how Bitcoin works. You can't regulate what the rules of Bitcoin are. You can only regulate the exchanges. You can, regulate service providers like BitSave for that matter. So Bitcoin will remain outside the government control or regulation. That's how it is designed to be. Nobody can do that. But stable coins, like I said, there's an actual piece to it, right? Like you are keeping those dollars in the bank. And again,
Right.
those dollars are regulated, those banks are regulated, so you have those control. And whenever you program these, let's say, whenever you issue these stable coins, there are certain AML checks and all that embedded into it. For example, if Tether tomorrow knows that a certain amount of Tether or USDT has been used for a particular transaction which is illegal, they have an option to freeze those tokens. Those freeze
Okay.
buttons are there. So it is still subject to permission and all that. But Bitcoin is permissionless. Like if I want to transact this, nobody can stop me from transacting it. So that's basically when people say that Bitcoin is not backed by anything as a flaw of Bitcoin, is actually the best part of Bitcoin. If Bitcoin was backed by something in the real world, you
Hmm.
can just destroy what is backing Bitcoin and basically remove the value out of it, right? The fact that it is not backed by anything is the actual reason why it has so much of value.
Right, sir. Now, continue on the regulatory part. Can you explain the two upcoming crypto regulations in USA, Genius Act and Clarity Act? I believe one has already become a legislation, the Genius Act part, but Clarity Act is yet to become.
Yeah. So, Genius Act, I'm guessing it will be signed by President Trump tonight. Again, not getting too much into the technicalities of it, but Genius Act is specific to the stablecoin bill, or let's say stablecoin legislation that US is going to come up with. So what that will allow is for more companies to basically launch more, or let's say their own, or issue their own stablecoins by keeping the dollar in the bank account. That will also, they will also, there's clear guidelines in terms of how you should do it, what kind of AML checks or CFT checks you're supposed to follow. And it basically means that there will be more issuers coming in the near future. We recently heard about JP Morgan filing for something like a stablecoin version of for their internal ecosystem. So yeah, so that's what basically Genius Act is all about. Clarity Act is primarily for the ecosystem, to give more clarity on crypto regulations for the service providers. For example, right now, you might have heard in the last couple of years, just before the Trump administration came in, there were a lot of lawsuits against all the major crypto companies in the US, including the Coinbase and Kraken and all that.
Right, right.
Because even in India right now, we are doing things based on our best of understanding of the current rules, right? Like, I mean, when things are not defined, we have our own interpretation, and we are doing things with our understanding of what is right and what is wrong. But tomorrow someone can come and say that what you did was wrong, right? Because that's what lack of clarity does. And it also prevents you from innovating, prevents you from taking a risk, or going after a new opportunity even when you see an opportunity. So what the administration is doing right now is to provide that clarity to the entire ecosystem, including the exchanges, including other people who want to build payments companies and all that. So yeah, it's going to be a good thing. Of course, that means more innovation, more funding, more employment, and I think that's something that maybe India should also watch. Right? I mean, I know we have our own, challenges in terms of that, but it's when you can genuinely solve a problem, it also means more people getting an opportunity to do something for the global audience, and it can have a positive impact on the economy, and that's exactly what US is trying to do right now with both these bills.
That's very logical what you are saying. And very, very simple. You are very lucid for the audience. I must praise you, sir. Uh, now, if the Clarity Act is about that, at the same time there's something I read. There's a desire to ban central bank digital currency in US. Though there's a debate going on. So why ban?
Yeah, so see, there are a couple of things, right? Like central bank digital currency basically is a crypto version of uh, the dollar, as in, let's say, it's not really stable coin, but it will still be controlled by the Federal Reserves. It will still be controlled by the central government, which means it's not a private company that is issuing it or managing it. Right now, if you think about US, one of the major reasons why they're resisting stable, I mean, sorry, the CBDCs is because it's a form of surveillance as well, right? Because right now, when I have 100 rupees of note with me and I give it to someone, nobody's getting to know about that transaction. No one knows what I'm doing with it. But once you move on to a CBDC world, every transaction that you do gets tracked, and also it's programmable money at the end of the day, which means that if I'm holding, let's say, a lakh worth of CBDC, and if I say something which the government doesn't like, my money can be frozen with a click of a button, right? So I think it happens in China. I heard sometime in Thailand they issued uh, a CBDC with a 6 month expiry period, saying that if you
Okay.
don't spend this in 6 months, it's going to expire. So it has its pros and cons, and in US, I think the current administration is not in support of this level of surveillance to the US citizens. So that is one of the main reasons why they are opposing it, and also the fact that they don't want to do it themselves when private companies are willing to take the burden of setting up a stable coins and basically market it around the globe, right? It pushes US, the fact that dollar is going to be more dominant. It will be accepted worldwide. It's still the reserve currency, so they're trying to expand the dominance of dollar with stable coins because it has a wide reach compared to a CBDC that the Federal Reserves might come up with. So yeah, that's a reason that why they're against it.
Oh, very nice. So US is working in the right direction, right? Uh,
And there's
very,
there's one more piece. There's one more piece to the whole stablecoin thing. The stablecoin issuers are one of the largest purchasers of U.S. government bonds,
hmm.
right? For example, whatever money that they get and issue stablecoins against, that money gets parked into U.S. Treasury bills because for the issuers it's free money, right? You can get 4%, 5%, whatever the interest rate is, and that's free money. You're not going to pass it on to the stablecoin holders. So with more stablecoin being issued, US knows that they will have more money, or let's say there will be more purchasing for the let's say US debt as well. So it's good for them from that point of view, especially when at the time, if you think about it, the value of or let's say the trust on US dollar is reducing, or the US government is reducing because of all the tariff and geopolitical situation, and these kind of things on the other side might improve, or let's say might still create that demand for dollar and for the treasury bill. So yeah, I think it's a calculated move from that point of view.
What is the scenario at home? Do we have any regulatory sandbox? What what uh, what are the market players thinking? What is your view?
Yeah, so see, we can't look at what other countries are doing and replicate it because we have our own challenges, we have our own restrictions in terms of how money is moving and everything, right? How banking works and all that. So I'm not particularly in favor of looking at what other countries are doing and trying to replicate the same thing in a country like India. But unfortunately, every time RBI Sandbox comes up, SEBI Sandbox comes up, I think it specifically says that crypto companies are not allowed. So yeah, that's been a challenge for all of us. One thing I would like to clarify to everyone who is listening is that crypto is unregulated, and that doesn't mean it's illegal. Got it. So people confuse unregulated with illegal as a word, because it's just like digital gold. You have so many digital gold platforms in the country. All of them are equally unregulated. There's no SEBI or RBI controlling them or overseeing them. Maybe it makes sense to look at what the role of a regulator is. You basically have to, let's say, protect the investors. Right? That's what the regulator have to do.
Right.
That is what the regulator have to do. And recently, I had this issue of my bank charged me, let's say, uh, some few thousands of uh, rupees as part of, let's say, my credit card bill. Even though I paid the bill, they charged
Hmm.
it. And I went to the nodal officer. I spoke to their support for almost a month, and they didn't bother to do anything about it. Finally, I reported it to RBI. In 2 weeks, I got entire amount back from the bank.
Oh,
Right. So
okay.
so then you get it, right? Like, even so, something went wrong, and I had a way to go and get protected against that. So that's a role of
Hmm.
a regulator, if you ask me. And right now, it's a genuine problem. To be honest, in the industry, sometimes there might be platforms that are not very responsive, and investors do struggle because of that. So that's one of the main reasons I personally want to have regulation in the country, so that we can give that additional layer of protection to the investors.
Okay.
And that's very important, right? Like, some of the people do ask, what if you run away with the money? Whom do we go? What if you're not responding to me tomorrow? What do we do? Right. So, and I always say, it's not that I don't want to give you that level of comfort. Unfortunately, we don't have system for us to go and register, or, let's say, get regulated and all that. Yes, we've been hearing about a consultation paper which is expected very soon. So once we have that, probably we'll have the discussions. It becomes a bill, then it becomes an act. um, I'm guessing 2-3 years. Yeah, that's my personal opinion. I hope during that phase, it's, of course, the industry will also grow, but it gives us more confidence to invest, and maybe innovate, also solve more problems. Yeah, so basically the message here is that it is unregulated right now, which means that it's important that you pick the right platform that is ideal for your need. Maybe if you're a
Hmm.
trader, go to an exchange. If you're not a trader, we're just trying to save, pick a platform that is suited for that. And look at the look how good, how the services look good. I mean, look at the team, what their track record is. Because if something goes wrong, unfortunately, right now, of course, you can go and complain in the police and all that. But at the same time, but you don't have a authority to, and a process to recover that, or, let's say, to protect you from that point of view. So that's when it becomes tricky, and it becomes very important that you pick the right platform if you're allocating to Bitcoin or even anything else at this point in time.
Thank you, sir. The questions are there have been questions from the audience. They have found it so interesting. So let's open up the floor for questions.
Sure. Should I read them?
Dr. Vara Prasad Chamakura, PhD, MIOD. Why is it so volatile? What are the factors causing this volatility?
Yeah, so like I think I did mention, it's not a feature of the asset; it's a feature of people trading it. So let's look at other markets which are not very volatile. For that matter, let's say you take a currency market, let's say INR to dollar, for that matter, right? You have more people on both sides. Let's say you have an RBI maybe trying to protect INR's value. You will have market makers. So it's a matured market. It's a regulated market in every country, and it has its controls, right? For example, if you take stock, for that matter, if it falls 10%, it hits the lower circuit and the trading stops. But Bitcoin is a global asset which is being traded 24/7 in every country, without any stop, without any upper circuits, lower circuits. So when more people find it attractive, the price goes up. and you don't have enough sellers at that point. You don't have any upper circuits. When more people are scared, there's a news that it's something went wrong, then you have fear from every country, every part of the world, and there is that downside. So and maybe you don't have enough demand at that point in time to protect its downside, or you don't even have a lower circuit to stop the trading. So it again boils down to how people are looking at it, our emotions, our greed, all that. An interesting chart everyone should look at is how gold's price was, during the 1970s, before the ETFs were launched. Gold used to correct some 60%, 50%, multiple times during that phase. And it was until 2000. I mean, after 2000, where ETFs were launched, there was a matured market. There were more institutional participation. There were people on the buy and sell side. That is when gold became a lot more stable. Right. Unfortunately, it is still a 15-year-old asset. And if you ask me, it's just been the last 7-8 years where you've had like proper trading, proper institutions coming in, right? And if you look at the volatility of Bitcoin over time, it is dropping because you have more participants, you have more institutional participation that is happening. And then so it's basically the nascent stage of the asset. If you ask me, it's still in that teenage stage. I always say this, like when we were young, it's the most volatile phase of our life, right? The early years, the teenage, and then you mature and you become a lot more stable. So maybe for another 3 or 4 years, it might still be a lot volatile, and then it becomes very, very stable. And that's when that unit of account piece, because once it becomes stable, then I can say that, okay, my service is worth 0.001 Bitcoin, and it can stay that way for the next 6 months. Right. So that's the reason why it is volatile compared to everything else. And just to add on to this, volatility means opportunity. For example, gold is not volatile because that opportunity of upside is gone. Now, high volatility means risk, and high risk mean high reward. So that's one way to look at it, and that's why we have an opportunity right now. And if you're scared of volatility, the best advice is have a small allocation. Don't put, let's say, 50% of your portfolio into Bitcoin. Just have maybe 2%, 4% of it, so that your overall portfolio is not really affected much with the volatility. Size it correctly. Like at BitSave, we have investment planner service where if we sit with you, you understand. We try to understand your risk profile. Are you conservative? Are you aggressive? And then help you to size it accordingly in the portfolio. What percentage of your assets should be in Bitcoin, or even maybe some of the other large cap assets. Yeah.
I have a well diversified portfolio. You are giving me a motivation to further diversify. Okay, anyhow, next question for the audience, please, media. Dr. Vara Prasad, same person, isn't it?
Yeah, because it's so easy, right? Like,
and another question is, which is the best cryptocurrency? I mean, this is very difficult to answer. Anyhow, you give your answer.
See, people always ask, why everyone is talking about Bitcoin and not really everything else, right? So basically, the way to look at it is, Bitcoin is the base currency of the internet. So just like in India, you have INR as the base currency of our country, and then you have the Tatas and Reliance, and all those companies solving specific purpose, and the stocks of representing that company. So if you take internet as a country, then you have Bitcoin as a base currency of that particular place, and then you have an Ethereum or a Solana or a Chainlink solving specific problems. So those are like technology companies trying to solve different problems. So instead of stocks, they have these tokens, which represents the economic output or economic productivity of those particular blockchains and whatever. So that's one way to look at it. So now you understand, right? Like, Bitcoin is very different from everything else. And the reason why we don't want to hold INR and park our money in equity is that INR loses its value because, let's say, historically, its supply goes up 10% every year. That's what the last 30-year data shows us. But Bitcoin it's not going to be inflated. So investing kind of becomes a choice. You're not forced to invest because the value of Bitcoin, or at least the percentage that you own as part of the network, is not going to be devalued by somebody else. So Bitcoin remains to be the best asset because of that reason. in their entire ecosystem. That doesn't mean that something else may not outperform, but if you think about it, everything else has a larger risk associated to it, because let's say maybe you take a Nokia as example for that matter. It was something that we used, all of us used for
Yeah.
15 years, but then a Samsung or Xiaomi came, and then the competition killed Nokia. Right. So when you're a technology company, it's difficult to predict which one of this will eventually go on to make it in the long run. Right. So Bitcoin is money and everything else is a technology company solving specific problem. Then there will be competitions. Competition might kill you if you're not moving faster. So there's this additional risk associated with it. So that is more like investing in startups, which is something that we don't really, we don't know which one will work. So that's one reason at BitSave we have an index offering. So we are the only company in Asia that is licensed by Bloomberg to build a product or offer a product that is linked with Bloomberg's crypto index. So this is like a Nifty 50 for crypto. Right. So Bloomberg will construct the index. They will manage it in terms of what components and what goes in, what comes in. And then we make sure it's allocated properly from our side. So then you don't have to predict the winners, right? Because the index will automatically adapt in terms of how the market functions. So I don't really have a answer to it, but if you have to pick one, it should always be Bitcoin. Yeah.
Next question. Any other question, audience? Can we invest in foreign assets using crypto?
Yeah. So the straight answer is no, because RBI regulates this whole, investments in foreign assets, and the rule says that if you're investing in a foreign asset, the transaction has to go via bank, which means it should be via a proper banking channel. So if I want to buy a property in let's say Dubai, I have to go to my bank, give them the money, tell them I have to wire that money from my bank account in India to this particular bank account of the builder or the seller in Dubai. That is the way to do it, and then I have to report in my foreign asset schedule of my income tax return. If you do it via crypto, of course there are brokers, there are builders in Dubai accepting crypto or stablecoin for that matter for properties. But if you do it, it's a clear violation of FEMA and the RBI rules. So yes, you should not be doing it. Yeah.
Next question. What do you think will happen to the Bitcoin ecosystem to start supporting the Trump presidency ends? That is not.
So it's a very good question. I mean, it makes I do get asked this a lot. See, yes, there's a lot of. I mean, it's a pro crypto government, and a lot of these things that are being done right now. I think over the next 3 years or so, it will reach a point where another administration may not be able to change. I mean, just like that. I mean, I think, and I'm pretty sure, and heard it from people in the US that the single most objective right now is to make sure that we move things or we make that much of a significant progress over the next 3.5 years, so that it becomes irreversible. Whatever progress that we make becomes irreversible, right? And we're not trying to do anything illegal. These are just trying to solve problems in a better way. And fortunately, there's a government there right now that is willing to support you to do that. And honestly, it doesn't matter. It's just that the whole thing has accelerated the growth and adoption of crypto, and maybe otherwise it would have been a different way. So I don't really look at it from that point of view, because the entire thing exists outside the government system. Of course, so yes, you can talk about timelines and all that, but at the end of the day, it's programmed. It will continue to do what it is supposed to do, like I said. And so I'm not really concerned about that. I think it's better that we just try to enjoy, the next 3.5 years, and then we'll see after that. And
Right.
Who knows whether he's not going to come back. I think I heard that they're trying to, change the rules and make him come back the third time. So let's see.
Is there still room for growth? I think
Yeah, I
we
think
had answered this.
I already answered that. Like Bitcoin is still, 0.5% of global. I think if you look at the total wealth, it's 0.25%. If you look at store of value as part of it, it's 0.5%. So I think, and there's this interesting thing, right? Like we've been using things that are not designed to be store of value for storing our value. Like a lot of wealthy people use real estate as their savings account because they just don't have a way to store their wealth. And as a part of that, what has happened is the home prices have gone up. So if you're a first time home purchase person, you're not just competing with other first time home buyers, you're competing with every wealthy person in the country that is also parking their wealth in those homes, right? So that's why
Yes.
some of these cities, the home prices have significantly gone up. And if you think about it, home prices real estate at the end of the day, yes, it's a great investment. But if you're looking at it from a different angle, yes, it has property taxes, it has repairs and all those other stuff. So now then when people think about it, and also now that the world is connected, global, and maybe they don't, some people want to move to a different country and you just can't carry real estate. It's highly illiquid also. It's very difficult to sell real estate, right?
Yeah.
So the younger generation is more keen on something like this that you can just carry around. I'm pretty sure most of this wealth that is going to be inherited in Mumbai, they're not going to go back to real estate or gold. I know where it's going, right? So there's a lot of room for growth from that point of view.
Looking at the flow of questions, it seems that you will be you will have to ask you in another session. Now, any answer this question? How to convert crypto to real currency? Just by selling off, I believe.
Yeah. I mean, so there are these exchanges. Like for example, if you hold it with you, let's say you can move it to an exchange. Most of the exchange subject to some requirements of showing where the, let's say, where the money came from. Are you the real owner? What is the source of getting this and all that? Once you get it, you can just sell it just like anything else, just like selling gold for that matter, selling a stock for that matter, and you can withdraw it to your bank account. And I think most of the platforms settle transactions within a day, which means when you sell to get the money in the bank, it will hardly take less than 24 hours.
Another question: is Bitcoin owned by small number of people? Isn't it a risk? I mean, you explain everything in the program. What more to add here?
Yeah. So see, there's a very large misconception about BTC. The fact that people owning it have a control over the network. It doesn't. I mean, it's designed in a way that even if one person owns all the Bitcoin, they just can't change the rules. That's how it is designed. So
Yeah.
there is another layer of authentication that is basically, it's called nodes. Like anyone can run their node. So that's how you sort of participate in the network, and any change in the network have to go through them. So the fact that someone owning a large amount of Bitcoin doesn't really change anything. I mean, they can't control the network at all. It's not like holding 99% of a company stock so that you have more voting right. It doesn't give you voting rights. I mean, holding 90% of Bitcoin doesn't give you any voting rights. So there's absolutely zero risk from that point of view. If people are concerned about decentralization of Bitcoin, I request them to learn about how to run a node so that we can make Bitcoin more decentralized. That's how it's supposed to be.
Sir, we will have to draw this session to an end. It's very, very educative, very interesting. Any last question? Anything, media team? Any last question there? I don't think we have any other question. Then we had a very 1 hour. If anyone, this recording will be available in our all our ICC social media sites, and anyone any other questions can send it across to us by email. So we thank sir very much. This was very educative, very simple, and very learned for us. Thank you.
Thank you for having me.
Thank you.
Yes.
Bye.